I want to bring in our next guest who has said, and I agree with him, that these days we're all rate watchers. I know when I wake up, I'm a rate watcher. Want to bring in TJM, their institutional director, Jim Iuorio. Jim, I never thought I'd live in a world where the first thing I looked at when I woke up in the morning were the bond yields. I just never thought it, but here we are. Here's the good thing. This morning, the 10-year yield got under 3.9, and we're in three. I always thought this 3.9 handle, the 200-day moving average, 3.9. To me, under that, I thought would be a huge buy signal. What are your thoughts? Because it's coming down faster.
Well, it was a huge buy signal. The 2-year was trading at 5.10 in late October and traded all the way down to what's it at now, 3.8, like you said. To me, that is a huge buy, 4.3, I'm sorry, the 2-year. But that was a huge buy signal, and that's why the stocks rallied 15%. Now, the problem is the S&P's got to that very, very critical high of 4,800, so now it's kind of like decision time. And the second that Patrick Harker said those things yesterday, it triggered some profit taking. I was not really displeased with that move yesterday. It doesn't break my somewhat bullish thesis, but the point here is that when the Fed is moving from a hiking cycle to an easing cycle, I believe the standard rate between those is about 3 months. But usually what happens is risk assets have a significant break to start and to really kickstart the easing cycle, even if they're planning on doing that. Like, I don't think the Fed is going to ease just by saying, yeah, things are pretty good when ease. I think they're going to ease when burning timbers are falling from the ceiling, and I think that comes within the first quarter, maybe toward the end of it.
Oh man, it sounds like you're talking about disaster then. I mean, you can kind of sense this though, right? I mean, the Fed I'm not sure they know how to articulate what you just said, because they couldn't come out and say burning timbers, but that's the first time anyone's kind of come out and said that.
Yeah, and it's happened. I mean, that's what it's happened before. We've seen that several different times. Everybody on our podcast, every show we say, the Mike Tyson quote, everyone has a plan until they get punched in the face. We've seen this happen with the Fed before in the stock market, where they're like cocky saying, yeah, we're hiking. All of a sudden the stocks break 8%. And I think it's James Bullard back in 17 said the case for tightening has changed, is less compelling. Yeah, the only thing that's less compelling is the stock market broke 8%. So they're very fallible, in my opinion.
So where are you on the stock market right now?
Okay, I am somewhat of a bull to stock market still. I think we were waiting for the pivot. We got it. I think that it is prudent for me to stay long. But another factor in this, too, is they're giving away options protection. So you stay long with the hedge. The VIX is at historic low level. It was up until yesterday's move higher, but still at very, very reasonable levels. So I think you stay long. I do think that there could be rocky road ahead, but I don't think it's coming within the next month or two.
So now you're one of the rare market pros that I know that likes Bitcoin and gold. So I got a minute to go. The next leg of this Bitcoin, where do you see the next rally taking it?
I like beaches and mountains. I like chocolate and vanilla. Why do we have to pick? The Bitcoin rally. Okay, I irritate a lot of the people when I come on and like, well, what's your thesis for Bitcoin? It's not very complicated. The moment that BlackRock, the world's biggest asset allocator, gets into BlackRock, gets into Bitcoin, I go along with them. And I am.
Right.
I like the fact that it broke out of a little downtrend yesterday. I want to see a higher price from yesterday, and then I think it's heading up to about 50,000. I think gold, by the way, to me, central banks are buying gold, and we have a profligate spending government that has no intention of slowing down. I love both those things as a fiat currency hedge.
We got less than 30 seconds. I've got a gold chart here. It's come back to levels. It's breaking out, but is it more these days a store of value? Is it something that can really make money in? I mean, are there alternative ways to make money? Because I look at gold now, I'm changing my thesis on it. Personally, I own a gold, but I feel like it's a store of value, not necessarily what I'm going to get rich on.
That's exactly what I think of it, too. When you look at that chart, too, I think a settle above 2065, 2070, 2070 is where the next leg is going to go higher. And I think that gold is still reflecting to us, kind of echoing those bad long-end auctions that happened over the last 6 weeks,
right,
when the market it doesn't have the appetite for our debt that they did in the past. And I think gold is becoming something that's serious. And I'm not one of these de-dollarization guys, but I think there's people out there who might push gold higher who are de-dollarization people.
All right, Jim. Hey, thank you so much, my man. Always appreciate you.